there are, of course, headwinds coming to the global indices with Australian investors able to play catch-up to the Aussie economy as it continues to open up. Let's get the opinion of Robert Talevski, who joins us from Activus Investment Advisors, live via Skype in Sydney. Robert, good to talk to you.
Hi Andrew, hi Nadine, how are you both?
Very well, thank you.
So let's pick up on the Australian market at least. What opportunities are you seeing? Are you fairly bullish as far as the local market's concerned?
I think it's been an interesting period. Obviously, Aussie equity markets are up 28% from their 23 March lows, obviously, and pretty much they're up 5% down from sort of the recent August highs. Equally, obviously, more impressively, the US equity markets are up 48% since their March lows, and only about 8% off the recent September March highs. Obviously, financials are something that sort of are a bit of a concern for us. Obviously, recently we saw some headwinds, further headwinds with the way that they have sort of, I guess, acted in terms of that sort of the money laundering sort of activities over the last couple of days. And then on top of that, they're struggling with obviously their interest rate. With interest rates being so low, that kind of impacts their margins, or the margin crunch, I call it. On top of that, they're going to obviously have to, monitor loan defaults potentially, which might increase. So I think that's probably a bit of a concern at the moment. And given obviously the Aussie market has such a big, exposure to banks, that's sort of one particular sort of concern I have at the moment to be considering.
Okay, so Robert, that's good. Two differing opinions in the past 5 minutes on the big banks and the financials, but that's what makes a market. So curious to get your thoughts then on that whole notion of a vaccine coming along, whether or not it's in a month, 3 months, 6 months. Our previous guest said there will be one. There's so many in discovery phase right now and trial phase as well. So is that influencing how you view and how you're investing right now?
To be honest, Nadine, probably not. It's obviously uncertain whether we get one that obviously works, and obviously by the time it rolls out, it could take a while. I think the key things that we're focusing on at the moment are obviously the upcoming US presidential elections. In terms of markets, I think markets don't like uncertainty. So obviously, if Biden wins, at the moment, given his proposal or policy around increasing US tax from 21 to 28%, that ain't going to be popular with equity markets, and probably it sounds like it would have a negative impact on earnings and earnings per share. His increase on sort of regulation will, again, going back to the point about financials, have a negative impact on the financials there. If obviously Trump wins, markets might be a little bit more favourable to that, given his sort of business-friendly policies. It's an interesting strategy at the moment. He's trying to obviously appoint to the Supreme Court a conservative, given to sort of replace Ginsburg. And this could sort of see an interesting development. It could sort of enhance his voting power with the Conservatives, and might actually invigorate, that sort of base around, and enhance his chances of the election win.
Yeah, well, Rob, in the lead up to the election, which is still a month or two away, of course, what risks are you seeing? Because given we're heading into the northern winter, it looks as though COVID cases are beginning to rise, certainly in Europe. That's the prediction in the States as well. And the other risk being this stalemate, that the stimulus package may not happen until after the election.
It's a fair point, Andrew. I think I don't expect it to derail anything or markets or the sort of the recovery in growth, but definitely as obviously we're coming out of winter, the US and Europe are going into winter. We've seen Europe and the UK announce further measures around restricting movement, and that obviously will be a negative. People get more conservative, more cautious. And this again kind of feeds into that sort of, it means obviously it's going to be taking a little bit longer for GDP growth, or it might slow down the recovery. So that's probably definitely going to be a negative as we enter that particular season. But again, a negative versus something completely drastic in terms of bad impact, we don't see that having a massive impact. I think as we've seen, there's enough resilience out there for the economy to continue a recovery, albeit at a slower pace.
So, Robert, just quickly, does that mean that you would be wise, or investors would be wise, to have a bit of cash sitting on the sidelines ready to deploy if we do see periods of pronounced volatility with all of those risk events out there?
Absolutely. I think it's important from our point of view, where we continue to hold all-weather portfolios, that is, portfolios that will benefit should we see that sort of continuation of the equity market rally. At the same time, if there's equity markets fall, there's plenty of opportunities or investments, I should say, in the portfolio that will protect us on the downside. Obviously, we need to be patient as well, and I think that's the point about having a bit of cash and just patiently waiting for opportunities to present themselves, but also being nimble is very important. I mean, as we saw, the opportunity that we saw in March was a very short window, so I think it's very important to move quickly. But the other thing that I guess my observation here is that the case for active investment management has been very strong and supported by the fact that obviously in this given environment where there's all sorts of risk, obviously the US election and a fat tail on the back of that, new spikes in coronavirus cases in Europe and the US, it really sort of pays to have active management or active investment managers that will invest in companies that will either flourish in this current environment, or at least not sort of have a massively negative impact.
Okay.
Rob Talevski from Activus Investment Advisors. Great to join us. Thanks very much.
Thank you.